Ladies and gentlemen, welcome back to the Future of Money Virtual Summit. My name is Ryan Andrew Peterson. I'm the CMO of Conscious Marketer, and we are co-producing this event. On the line, we have a special treat. We have Roger Bryan. He's the co-host of this event and the founder of Digital Currency Index, with John Tarr, the founder of Totally Crypto and another co-host of this event. John is going to be introducing Roger here in just a moment. But before we do that, I just wanted to give you a preview of our lineup today, the final day of the Future of Money Summit. We've got some heavy hitters. After this call at 12 noon, we're going to be joined by James Altucher. He's been called the crypto genius, and he's got that genius Einstein-looking hair, and he's going to be talking about crypto and the future of money. It's going to be awesome. After that, at 4 p.m. Pacific, we have Adrienne Ashley, the third co-host of this event. And she's the author of Minting the Future. And after that, our final call at 7 p.m. tonight, Pacific time, is Brad Hart. He's going to be talking about After the Storm, looking forward to the future of crypto and blockchain. Last thing before I turn it over to John, under this video, we have some share icons for Facebook, Twitter, and Google. If you could click those and share this information with your friends and family, it's not too late to join the summit. The replays up are for 24 hours, and we have recordings. We've had some visionaries on these calls, and it's been an incredible event. So social media doesn't allow us to advertise too much, so if you could get this out, it would be awesome. But without further ado, John, why don't you take us away?
Hey, thanks, Ryan. Welcome back, everybody, to the Future of Money, the world's largest live online cryptocurrency summit. I'm John Tarr, founder of Totally Crypto and co-host and producer of this event. Super excited. We've got Roger Bryan coming up, and I'll introduce Roger in just a second. Today is going to be a great day. I'm looking forward to speaking with everybody that we have to close out our summit. It is day 10 of the summit. And remember, there is a button below where you can get our cryptocurrency training kit. It includes all of the talks that you've seen over the last 10 days, audios, videos, PDFs, everything that you need, plus 25 speaker bonus gifts and a special gift that Roger Bryan and I are giving called the Cryptocurrency Mastery Program. That alone is probably worth $2,500. But the regular price of this is going to be $497, but you can have it right now for $297 during the summit, which ends today. So you want to make sure to get that today. And in my opinion, it's the most comprehensive training program out there. And honestly, as I go back through some of these speakers, it just blows my mind how intelligent a lot of our speakers are. And so if you don't get this so you can kind of continue to internalize it, I think you're nuts. But that's my personal opinion. Also, remember, the content of this summit is provided for informational purposes only, and it's not intended to provide any specific tax, accounting, legal, or other investment advice or provide the basis for any financial or investment decisions. You should always consult a professional and seek guidance specifically to your own situation. All right, let me introduce Roger Bryan. In addition to being my friend, my business partner, Roger is a seasoned investor with 2 startup exits in the tech sector. He was an early investor in GoDaddy, HubSpot, and Store Capital. He's a best-selling author, has been invited to the White House as one of the most influential young entrepreneurs in the U.S. He's been featured in Mashable, Entrepreneur, Forbes, and Philanthropy magazines. In his own words, his biggest accomplishment is that he's raised over $156 million for nonprofits over the last 20 years. That's a big number. He brings the team 20 years of investing experience and a passion for data-driven investing, which is totally awesome. As the CEO of Digital Currency Index, he's the co-creator of Albert, the world's first supercomputer for cryptocurrency analysis. Albert reviews over 2,100 coins every 10 minutes and will run this algorithm over 1 million times before recommending a coin. Albert has outperformed the market every month since he was launched in the crypto space. That's a fact. Welcome, Roger.
Thank you for having me.
Dude, I'm so excited that we're getting ready to jam here. Not that I don't talk to you every day, but not like this, right? So it's super fun. And so let's ask the question to you that we've been asking to all the speakers, right? And that question is, How do you think crypto will influence the future of money and the world? What's your perspective?
I've had some really strong opinions on this. And one of the things that I've loved about this summit is hearing other professional investors' um, ideas on this topic, because there were a few statements that were made by like Fred Thiel that like we already live in a world where most of fiat is digital. And it's an easy to understand concept, but somebody needs to slap you over the head with it to understand that like 98% of all US dollars are actually transferred digitally. We don't think of them as a digital currency or cryptocurrency because they're not on a public ledger on the blockchain yet, which leads to like my projection for the future of all of this, that Bitcoin isn't really the future. Blockchain is. Whether or not Bitcoin becomes the coin that everybody in the world uses for everything, or that's Bitcoin Cash, or that's 1,000 different coins, it is going to be a transition to a public ledger or even a private ledger of some type, which is going to require blockchain in order to work.
Yeah, that's a great perspective on that, and super exciting. And we've talked before about Bitcoin, and it's certainly got the good, the bad, the ugly with the volatility, but certainly blockchain is here to stay, and it is absolutely in its infancy. So you had a couple of things that you wanted to talk about. Now I'm going to let you kind of just dive into the first topic and let's dive deep. And then I've got some things I'm going to ask you after that, but I want to make sure we get through, what you wanted to mention.
Yeah, and let's start with the first topic. So back in July of 2017, I published an article over on my LinkedIn profile, which you can find under Roger C. Bryan, called Theoretical Wave Theory for Cryptocurrencies. And it talked about the different dynamics that are going to influence the way that this market trends. And I didn't have a crystal ball, but it's come pretty close to being true. So I think the most important thing that we can talk about is where we're at today and where we're going. And now I'm not the person that's telling anybody to sell their Bitcoin, nor am I selling any of my Bitcoin. It's just kind of sitting there because it's so much of an unknown of whether it's going to go to $250,000, like Tim Draper says, or it's going to go down to zero, which is highly unlikely based on the demand. But it's that point, we're at that point in the industry where the transition into blockchain is actually happening at an accelerated rate. And more importantly, it's the transition of blockchain into blockchain as a business. And I think the key thing that I would like to get across to anyone sitting here thinking about investing is that in these volatile markets where utility tokens, cryptocurrencies, equity tokens, which aren't to market yet, or any of these types of assets are getting these wild roller coaster rides, the best place to be putting your money is in investing in infrastructure. True equity stakes in the infrastructure that's going to bring blockchain to market, whether it be through the financial markets, whether it be through healthcare or insurance. And those opportunities are everywhere if you spend a little bit of time looking for them.
Yeah, I think that's a good point too. A lot of guys have been talking about that. Where do you see then the market, the crypto market as a whole, as it sits right now, this as of today, $300 billion market, where does it go?
So it's interesting because there's three paths. The most important element to all of this is the way that regulation affects the overall markets. Until we're completely on the other side of that, and there's multiple camps there. Without like making this confusing, the SEC one day will come out and say the laws that govern cryptocurrencies were written in 1934. Then you'll see an article on CNBC, like you do today, that says the SEC is about to get rid of the lack of clarity in the industry. So which is it? Do we have absolute rules and clarity, or is there some element of uncertainty? Once regulators give us a set of rules to play by, this industry will flourish, whether it is through cryptocurrencies. You look like you got something on that.
Well, I'm going to push back. And when I say push back, just discuss, because I think you and I have talked about, they seem to be perfectly clear on what a security is. And so I think as much as people in the crypto space want to like pretend or look for clarity, well, it's clear that if you're raising money for investment and the people that you're getting money from are expecting to profit from that investment, you're a security.
I agree 100%. Even in the projects that we look at now, we won't invest without equity. We've just completely given up on any other type of investment, which is actually going back to the fundamentals of how you should invest. I think the problem is that so many things came to market outside the scope of regulation, and we're all waiting to see how regulators react to what already happened. Are they going to regulate exchanges that are now trading in what could be securities and profiting from that without being registered? Could that create a catastrophic negative effect on the market? Or could the T-Zeros of the world, the Circles of the world, the Pollinexes, could they all come to market with regulated markets, and we have to see all the assets move over to them? Until that happens, you're going to see a downward force on crypto. When that happens, the sky's the limit after that. We're looking at multi-trillion-dollar market caps.
Yeah. So here's something that I think. Okay, so you've got this $300 billion market, and the U.S. is clear that basically, I mean, what they're saying, in my opinion, is Bitcoin's not a security, and the reason is because Bitcoin didn't raise any money, right? But everybody else, all you other guys out there, you are a security, and we're coming after you. That's what it seems like to me, and I'm curious how that is going to affect the market, because in one side of this world market, one of the cool things about it is that regular people have been able to go invest in these early stage companies where they couldn't do that in the US, right? I mean, you have to be accredited. Like you're going to be accredited. So I'm interested to see how that's going to affect the market, because I do think that this market is going to live. I just don't know what that looks like with regulation.
Yeah, and that's the hard part, without getting into like a diatribe on like how unfair the world is to so many people. Like a good example is, if you're a millionaire today, it's very easy to become worth multiple millions of dollars because you have all the opportunity in front of you. Not because you just have the money, but because the law says you're allowed to make more, which is ridiculous. If you're a college kid that makes $50,000 a year, hopefully you don't have hundreds of thousands of dollars in student debt, and you want to invest 5 or 10 grand in a speculative investment, you're just not allowed to. So that opportunity, the big guys, the big banks, they don't want everyone to have it. So what's going to happen? Are we going to see regulated markets come to fruition and that allow us to trade in these securitized assets that weren't originally labeled as securities, and the market just flourishes? Or are they going to have to attack the Ethereums and the Ripples XRP of the world and drive this market into the ground before they're going to let it be reborn and come back up? I don't know.
Now,
we're sitting waiting.
Well, and here's another thing that I find interesting. So if you were talking about just in the United States, you and I are in the United States, well, that's one thing, right? But then you've got, okay, so the United States may take a hard line, but then you have all this whole other world that may, the crypto market could flourish in the rest of the world. And so I think that that also adds an interesting dynamic.
I think that's a really important dynamic, because especially under like the current way that the administration's looking at the world from a competitive nature perspective, which I'm not talking about it from a political perspective, but from a business perspective, I agree. If you put the handcuffs on an industry that can revolutionize the world in so many different ways in a specific country, and other countries don't have those handcuffs. Now, in China, the government's putting billions upon billions of dollars into blockchain and artificial intelligence technology. If in the US you're regulating blockchain technology or you're stifling creativity, you're giving other countries an opportunity to get ahead of us. I don't like that. I want us to be the dominant player. I do like the whole free market world economy idea, but don't handcuff the people that can create the greatest good for the world with regulation. Clear that shit up and let us go do what we do.
Yeah, it's going to be interesting to see. One of the things, like the SEC chairman that was on the other day, and he was basically talking about how we're the world's model for securities, and he's right. So there is some truth to what he's saying. And it is also apparent to me that they are not going to change what they're doing. However, here's the one trump card with no pun intended. I don't care politically what your thoughts are on Donald Trump, anybody out there, but you can't deny that the guy is a marketer. And wherever he can find publicity, he goes after it. So I'm curious to see if he sees an opportunity for publicity here, what might happen, with U.S. regulators, because he is a publicity hound. And so if Bitcoin does start to rise a little bit, and he sees that maybe he can get in there and shake some things up, perhaps with regulation or deregulation of some stuff, that may be a factor. Do you? I mean, that's pure speculation, but
No, but you're not far off. So when I talk to a lot of industry insiders and early investors in the space, the political landscape is important because when you look at, we might not see anything for the next 2 years from this conversation, but in the 2020 election is probably the first time that some of these decentralized assets could come into the conversation. Like, what are you going to do on Bitcoin? It's a threat to the dominant players in the financial markets. Major economies are adopting it as their primary currency. It could start to come up in 2020. I don't want to name names, but there are some people on the Democratic side of the aisle that if they were to run for president, she was to run for president, not talking about Hillary, somebody else, that there's a lot of fear that a lot of this was going to become worse. There's also opportunity then in the 2020 election, if it becomes a topic of conversation, could Donald Trump pick up on it and use it as a platform for expansion of knowledge, bringing Main Street investors more aware of it in a positive light? We don't know. We don't know who the players are going to be. God forbid John McAfee gets up onto one of those stages and starts dropping some crypto bombs. I'd be all for that, but I don't think they're ever going to let them, or they are the establishment, are ever going to let him anywhere near a microphone. But you got to think about what he could do given a voice.
Yeah, here's something that's interesting. So we'll switch gears, kinda. But Fred Thiel talked about friction, right? And he's like, there's friction. And I think that for people to understand the crypto market, this world market, there's just right now, and this is why, in my opinion, it could be a very good time to be an entry-level investor because there's massive friction everywhere. You have regulation friction. You have different countries involved friction. You have exchange friction. So this is one of those things where I'm trying to think of who was our guy. I think Barry Cohen, who was like, hey, you basically have a 50-50 shot, 50% shot. Oh, no, Andrew Keen. He's like 50% shot that this thing is going to go sky high and 50% shot that it'll go to zero. But the chance of it going sky high, he's like, it's the best risk out there in the market. What's your take on that? I mean, right now, if you're an entry-level investor, I mean, it's a pretty good risk play.
It is. And because it's still available to those that might not have access to those other types of capital investments from an accreditation standpoint, a 50-50 shot is actually pretty good when you think about the upside on a limited supply item. So it's supply and demand economics. Right now, the demand is diminished by those downward force items, such as regulatory risk, the news coming out about possible market manipulation, the uncertainty, the mass liquidity issues that we're facing. So it is a buying opportunity if you believe that there's a 50-50 shot upside. That's not financial advice. Everybody's got to think about that from their own regard. We're looking at it now from a cash flow perspective. Are we taking assets back out of the market and putting them to non-crypto assets like equity investments in blockchain? Or are we building our portfolio in Bitcoin or other coins? And we can talk a little bit about that because we've got a very strategic strategy for investing that covers the gambit of all investing, not just cryptocurrencies.
Yeah, I want to jump into that. But, here's the thing that, let's end the speculation conversation. I mean, I guess it's all speculation at this point, but I had a guy say to me once that attention goes where the money flows, right? And there's a lot of money flowing into this marketplace. And when I say this marketplace, not just blockchain, but crypto markets, right? I mean, big time companies, Polynex getting bought, different things, Goldman Sachs saying they're going to come out with a trading platform. I just don't see it going away because of that. Because I don't think these companies are putting their money in something that's going to go away.
No, and this goes back to that wave theory, is that we needed the last speculative increase in assets to prove to investors that there's the ability to drive demand in this market. Now they're happy to let it deflate. The money is still being invested. In fact, more money is being invested in this space in Q1 of 2018 than was in 2017. The thing is, it's going into different types of assets. It's not going into ICOs and utility tokens. It's going into, back channel is the wrong word, but it's going into private placement of equity into the infrastructure of this industry so that the people with money, i.e. the accredited investors, are going to be able to ride the next public push of these assets to the general public. That's pure economics. I mean, it's basically economics 101 is, Can you prove a market exists? Yes. Okay. How do you invest to profit from that? Well, in infrastructure. Okay, let's move all of our assets into infrastructure. Once it's in place and we've got control, let's let the marketers go back and let's push this shit back out to the Main Street investors. And that's exactly what's happening.
Awesome. And so now, with that being said, we were kind of backstage, so to speak, before we went live. And you said, I really want to touch on the fact that I believe 99% of these coins are going to be worthless.
Not going to be, they already are.
They are. So tell us about that.
So there's a couple different elements to this, and it's data-driven first, and then it's theory second.
Let's talk about Albert. For people that don't know you and they don't know, what digital currency index is, can you just give them a brief overview of that?
Oh, absolutely. So Albert was born going on 5 years ago. He's my first child. Don't tell my wife that. He was born out of the Microsoft labs. So we worked with Microsoft to develop a predictive modeling engine to analyze digital marketing campaigns. We had a lot of success with that. And it was July of last year when a bunch of nerds were sitting around a conference table. When I say nerds, you have myself, you have a theoretical physicist from Case Western Reserve, you have the top quant at one of the largest electrical utility companies. You've got our head analyst, Ariella, and another analyst from Kent State University. Just by chance, I mentioned Bitcoin. And Brian, one of our data scientists, is like, have you heard of Ethereum? I'm like, yeah, I just bought some. And then the professor was like, you know what? I've been thinking about writing an algorithm to see if I could optimize my investing in the cryptocurrency space. That was on July 11th. We launched that algorithm on July 15th and incorporated on July 16th. So it took less than a week. The idea being that we had this massive amount of computing power that could analyze data and output strategies based on the modeling that we had. And it works better in financial markets than it actually did in the data-driven marketing side of the world. So when I talk about evaluating this from a data perspective, we're continually examining the velocity and price change, the liquidity of prices, the comparative analysis of pricing between coins and subsets of indexes and different strategic markets inside of the cryptocurrency space, trying to figure out who's going to rise to the top, creating a monthly output that we call the digital currency index. So it's an algorithmically adjusted output of the top 20. In some months, it's been 30 coins that you should hold for the best 12-month returns over the next 30-day cycle. Sort of simplistic, but that's the fundamental behind it. So why does Albert keep telling us that most of these coins are shit? Well, liquidity is a big problem with that. When you look at an illiquid market where you have less trading volume than 1/100th of the market cap of an asset, that's a huge sign that there is no demand value in that, let alone when you talk about theoretically project basis, meaning do they have a legitimate working project that solves a legitimate real world problem that can generate legitimate revenue at some point in the future, or solve such a big problem on the world stage that profits might not be important for a while? And the answer to most of those is hell no. And that was a polite way of saying it because I'm not trying to use too many swear words in this.
Yeah. So you're saying, and Albert's saying, that basically these coins are worthless. And so what's that do to the market? And by the way, the internet was the same way. We talked about that the last 10 days. But let's talk about so where are you bearish and where are you bullish?
Okay. So I am most bearish in the utility market token because that's where we see the biggest liquidity problems from lack of demand and lack of product viability. As an investor, we've invested in 56 different projects, and the majority of those were done before this December, January down cycle in the overall market, whether you believe it's because of regulatory, because of tax, or because the reality set in that most of these projects were junk. We've got about 5 projects that are left to come to market out of that cycle. And when we look at those, even some of those that we're holding millions of coins where the trading volume's less than 50,000 a day, even if we wanted to try to get out of those on a 20-day cycle, we'd have to push the price down to 0 to have any potential to do that. So we're bearish on the illiquid assets, which is the majority of them that are out there. Now, how do we fix that? Well, the markets have to adjust. You look at the Bitrixes of the world that are getting rid of 20, 30, 50, 60, 70 coins at a time saying, hey, they're trash. They've got no product. They've got no liquidity. Here's 7 days warning. Get the shit out of our exchanges. We're going to need to see more of that. How do we accelerate that? Well, bring regulated markets to fruition, force registration. Now, this is a centralized concept. I am a decentralized guy. So I'm talking about how it could be done. I'm not saying the way that it should be done. it could then force all of these assets to decide, do we have the capital to register properly, which is expensive? And I'm not talking $2 million Reg A style, maybe $150,000 type of registration, which would be a new style of registration of some type to allow them to trade on regulated exchanges. That right there would cut out 95+% and create a stable, sustainable market going forward.
Awesome.
Where am I most bullish?
Yeah.
Equity investments, and it's unfortunate that not everybody listening to this has access to these, but equity investments in infrastructure. So we run a fund, and our fund invests in artificial intelligence, blockchain technology. Most specifically in blockchain technology is medtech. I'm trying to gobble up anything I can get my hands on, plus cryptocurrency trading infrastructure. How do I make investments in those platforms that once we have regulated markets will give me access to that trading volume? The circles of the world. And if and when I can get access to other assets as well, I will. Where can people find these? I don't usually share these resources, but Equity Zen is a great place to find these. I didn't even realize till the Tim Draper interview that he was an early investor in Equity Zen. You can go to places like Start Engine. Not the biggest fan of Start Engine because I'm not a big fan of the way that they work with their clients. But there are some opportunities there for the public to get on OPOs, in Reg CFs and Reg A's to get a little piece of some of these big plays based on the way the regulators will let you in. So I want from our fund and from what we train all of the people in Totally Crypto and Digital Currency Insiders to be looking at equity investments in infrastructure right now or blockchain as a business.
Awesome. And so let's visit ICOs for a minute. We, meaning you told me what to buy and I bought it, had some home runs on the
Absolutely.
ICO side, and it was a good time, right? But now I'm awake. It's 5:30 a.m. My head hurts. The house is a mess. Is the party over for ICOs?
There could be a rebirth of those. I unfortunately do not believe that it's going to be available to most of the public in the United States. The first point, though, that I need to make on ICOs is if the party is over for the Western world, i.e., Western Europe, the United States, Canada, it's not over in Asia. It's picking up steam in Asia. Now, as US investors, even as accredited, we can't get in on most of those deals. Like even our IP addresses from the United States are blocked from seeing those websites because they're like, the hell with this. We don't want to deal with the craziness of US regulation. We can raise millions, hundreds of millions, billions of dollars. A project just raised $14 billion in Asia, and we don't need them. The money's here. Total different dynamic of how they look at profit. So is the ICO party dead? In the United States, we're already laying in the coffin. Regulators will decide if they want to nail it shut and bury it, or if they want to breathe fresh life into it under what's called a Reg CF, small raise, or a Reg A, like projects like BitZumi did, in order to bring to life public access to the markets. There's a balancing act there, and regulators are going to have to decide how hard or how easy they want to make it for us. I would love to see a rebirth because there's been no greater wealth creation opportunity than the ICO markets of 2017 for the everyday American. Problem was, some people tried to ride that trend a little bit too much, didn't take any profits out, and are left holding the bag now, which is just a violation of basic investing rules. And it is what it is at that point.
Yeah, I remember. I remember some guys in the insider circle saying, "Man, Roger, should I cut this coin loose? It's only done 50% in 90 days. You know, it's kind of a loser." You know that the market is going crazy when that kind of talk is happening.
Yeah, and it became an obsession in the market like, oh, I just need to put this one in and get 10x and I'll jump out and go into the next one. And for those that weren't experienced investors, like I've had some great luck investing early in HubSpot, rode that to an 8x before I exited. GoDaddy, but those are 7-year investments. This idea that you can get 10x in 30, 60, 90 days has only ever existed in this market. You talk to major investors and they're like, if I can get 30% when the market is going up 8% from like an S&P perspective, I've hit a home run and every person in the world will give me their money to invest for them. So if there's an unrealistic expectation of unrealistic results from unrealistic projects, you get what you get. And that was the ICO debacle that ended in December.
Yeah, I think one of the things that people, if you look, I did a poll in the Totally Crypto group on Facebook, and I asked people, I said, how many people just invest in crypto and how many people invest in other stuff, right? And one of the things that you see is it was about um, 50% of the people, or maybe 30% of the people, just invested in crypto. And what crypto did is the hype behind Bitcoin's rise brought a lot of new investors to the marketplace. And so it's very hypey. But if you're not a sophisticated investor, which most people are not, then you just think that happens, and those are the people that get hurt. And I think that's who regulators are trying to protect, because sophisticated investors, if you say 15% returns, they get a little edgy, like, whoa, something's going on here. Like, this guy may be scamming me, because it's just not likely that you're going to get those kind of returns.
Oh, absolutely. And unfortunately, a lot of those people that came into their first investing experience inside cryptocurrency, depending on when they came in, may be jaded for life, not just from the cryptocurrency markets, but from investing in general. Like, if I'm looking to make a real estate investment and I'm looking for 7% annualized returns of some type, or I'm looking for like a 10-year payout so that I've got a net asset that's driving cash flow every month, man, 7 to 10 years, home fucking run. Whoops, I wasn't supposed to say that. But these types of investors, they came in with this expectation of hearing, like, there were some investments that we made that did 100x ROI. That's unheard of. And it's not sustainable. It's probably not going to happen again unless we're lucky, not strategic. Those people are jaded now, and I don't know what to do with them, because you can't reset expectation.
Yeah, I don't know that you can. I mean, I think that you have to look at other speculative markets, other speculative investments, and the one to me that is going to be most similar to cryptocurrency is like angel investing, right? Completely speculative. And those guys, yeah, you might hit a 30x, but you're expecting to lose 28 other times. You know what I mean? So it's like you have to understand and kind of build in that risk to your investing. And yeah, I mean, what I think Barry Cohen said it, that expectation is the birth of disappointment, or something like that. And so that's kind of what you're dealing with now in this marketplace.
Oh, absolutely. I've sat in on some of the meetings of the Ohio Venture Association when they look to build their portfolios, just like most venture funds or early stage angel funds, is like they expect that out of 10 assets, one of them needs to hit a home run. And a home run to them is like 10x, because then it covers all of their other investments. 2 or 3 will kind of trickle along, and 5 of them are definitely going to fail. So if you're looking for a home run out of 1 of 10 assets, you've got to be able to strategically invest so that you do pick at least one winner and not be disappointed when 9 of them fail to meet expectation. In the crypto markets of 2017, everybody thought that everything was going to go to the moon, which I want to slap people when I hear that. And it's not real. It just wasn't real. It's never going to be real again. That doesn't mean that there's not a third wave coming to this market that is going to be blockchain investing, that's not going to make people hyper wealthy, like investing in Amazon post the dot-com bubble. eBay, even though eBay is not really anywhere near the same regards of Amazon, and I'd actually have to look at the money and whether or not you would have lost depending on how you rode that. But the FANG stocks, as CNBC likes to call them, there's just been so much opportunity in this last technology boom that I believe that blockchain is going to be bigger because it has larger effect on more industries. So proper investing now into the assets that you can ride for the next 20 years is important. It's my 4-month-old daughter is now getting her investments inside of a Roth IRA, inside of artificial intelligence and blockchain. Why? It's the future. 2040, she should be pretty well set for life if I do this right over the next 20 years for her.
Yeah, I think that's a good point. And one thought that I want to discuss, and I've got some other questions, is I'm really bullish on, in full disclosure, this isn't investment advice. I own Bitcoin, I own Ethereum. Those are 2 big ones that I like. I like both of those. And I think that the future is now for those. I think that when, you're in a down market, I think it's a great time to buy. And I still firmly believe that institutional money is going to come pouring into this space.
I completely agree. And I know that we are doing our best through an education and publishing perspective to facilitate that. We're working with multi-billion-dollar firms, educating them on the market, educating them on how to come to market, educating them on what type of products the market needs that we might not be able to develop ourselves, and trying to participate in those the best that we can. So we're both firm believers in that. I have always been more of an Ethereum guy than a Bitcoin guy because I see more use cases and I see more fundamental ability to adapt. Now, Bitcoin has done some things right recently to fix itself in the things that it does wrong, lowering overall fees, improving transaction. It's got the biggest brand in the market. I came out and said that there was the potential for Ethereum to unseat Bitcoin in the future for the number one asset. That was before regulation. I firmly believe that if regulation can come out on the side of Ethereum not being a security, that it is a depressed asset because of regulation right now. The ICO monetization cycle has really hit the market. A lot of that liquidity has been absorbed. I don't know necessarily how much is still locked up inside of projects. Again, with 99% of projects being scams, I'm going to assume that 80+% of them have completely liquidated their Ethereum holdings back into money, or sitting on a beach somewhere drinking Mai Tais, thinking about all the suckers that gave them money already. And that's a good thing that we're on the other side of that. I circle back to regulation. I'm a risk mitigation first, profit seeking guy second type of investor, and regulation is the biggest risk to the markets. So if regulation came out and they said this is not a security, I would be sitting there on GDAX clicking the button buy, kind of a Jim Cramer button, buy. But I'm waiting for that moment to hit.
Here's a thought that I'll give you on Bitcoin and why I like it so much from a pure marketing perspective. If you look at so Ariella was on the other day, and she's a millennial, and we both know Ariella, and they're techie. They get it. They're like, hey, I got my phone, I got this, I'm going to swipe this, I'm using whatever to transfer money. Older people in that 45 to 65, 70-year-old range are not techie, right? They're not techie. And so when you say Ethereum and ERC20 and smart contracts, they're like, huh? They don't know. But when you say Bitcoin, people know about Bitcoin, but that's not my point. My point is the value prop there is it's finite. There's only going to be 21 million, and people can wrap their head around that. They can wrap their head around that as a store of value. And I think older investors, when they come into this market, all the exchanges, they're going to have Bitcoin on it. You know what I mean? All the institutional exchanges are going to have Bitcoin, and that money is going to go to Bitcoin, because when you're asking your financial advisor, and he's going to say, well, ERC, they're going to be like, huh? And he's going to be like, hey, there's only 21 million of Bitcoin. He's going, oh, okay, I'm in. That's my thought. You have any thoughts on that?
There's two parts to that. So the first one is I always like to tell the beta VHS story. Like, you ask people which was the better product, and people think that it was VHS because it won, and it was the one that stuck around until it was eliminated by DVDs and then eliminated by Netflix. The reality was that beta actually could store more video content. It had a clearer picture, but they hit supply problems. So VHS won. Bitcoin is kind of the VHS. It got to market earlier. It got greater brand acknowledgement. It's got greater adoption. It's going to win when you look at it from which one's going to be bigger by the pure sake of being bigger. Now, how do we get it to the point where Bitcoin becomes massively scalable beyond the perception of demand from mass market entry into the markets? Well, it's adoption at the government level. When you look at countries like Japan saying that, you know what, we'll accept Bitcoin as a currency of trade in our economy. You need more of that, and then it's really off to the races for something like that. And there's just a few things that you need to fix. If I could go to McDonald's and buy my Big Mac, which I haven't had in like 6 months since I changed my diet, and I could really use a Big Mac, and not have to sit there for 10 minutes waiting for it to process and then pay $3 in fees on a $5 transaction or however much it costs, that would be a game changer too. So I agree with everything you're saying. I just think there's other elements of it that will drive it to that $250,000 price. One more part on that. We've got to, as a market, also adopt the Satoshi. There's a psychological barrier to the entry into Bitcoin for the everyday small investor. There's a lack of understanding that you can buy eight decimal places down of a Bitcoin down to the Satoshi for I don't know, $6.50 today. Don't quote me on those numbers. I'm not doing the divisional math right, but you can buy small parts of it. I'd like to see greater market adoption into that ability to buy smaller pieces and the psychological of understanding that you don't need $6,400 to own Bitcoin. You can use $10 and you can buy and own Bitcoin today. The millennials get it. Our generation doesn't get it, and our parents' generation doesn't have a fucking clue.
Yeah, I would agree with that. I would totally, if we had more time, I would totally push back on Bitcoin only because it's like, and I don't invest in gold, but nobody's out there spending gold bars. I don't think Bitcoin's ever going to get adopted as a currency. I think it's a store of value. That's my opinion. And I love chatting about it. So I appreciate that. But we've only got like 20 minutes and there's some questions I want to ask. So we can't, unfortunately, I can't win the debate. Plus, it's almost not fair. So I'm kidding, of course. Okay. Here's the thing. You get in July, Albert starts cranking. You do some ICOs. What's one project you invested in that never took off that still stuns you, where you're like, I can't believe that project didn't take off?
Well, so we've really only got one of those cases, and it's not dead. It just ran into a lot of problems, and that's Tezos. It was supposed to be the blockchain for the financial markets when it did its ICO July of last year. You've got consultants running it from some of the biggest financial institutions and consulting firms in the world. You've got backing from some of the biggest Wall Street banks. They raise $140 million. They're supposedly setting the standard for how money is going to be raised by setting up a nonprofit in Switzerland and doing all of these things. And then the lawsuits start. And then the problems with contracts start. And then the regulation shifts on them. Fundamentally, the regulation shifts on them. And you see it kind of start to fall apart. Now, it's June 2018. It's been a year, and I just did my KYC on them 11 investment 11 months ago. And it looks like it's going to finally come to market. Now, what happened during that time, though? Every other financial institution in the world has adopted some semblance of blockchain. And what Tezos could have been to the market, XRP or Ripple Labs, more importantly, not XRP, has kind of gotten the foothold in that, and or the institutions are building their own blockchain. So that's kind of one of those ones that hasn't really done what we wanted it to do because of its own internal debacles, which kind of sucks.
Yeah. Interesting. And so let me put this into context. So every now and then, Totally Crypto, we would say, hey, this is a really good ICO, right? You were making an ICO recommendation pretty much every month for that group. And we don't really do that anymore because there's not really a lot of ICOs to talk about. They're really good. So hit some absolute home runs. Now, here's the thing I love about entrepreneurs that regular people don't really understand. That my friend Travis Sago says that Successville, in order to get to Successville, you got to drive through Failureville, right? He's like, you just don't want to stop and get gas, but you're going to fail. And so you hit a bunch of home runs, but everybody wants to point out like, oh, this one didn't go or that one didn't go, right? What is your biggest disappointment? What's your biggest disappointment on something you invested in? Doesn't have to be an ICO, but a crypto investment that just didn't take off.
Yeah, one of them is Loki Coin. I mean, fundamentally, they should be a success. They are decentralizing one of the biggest cluster F industries in the entire ecosystem of entrepreneurship, and that's the ownership and the transferability of intellectual property, i.e. patents or pre-patent ideas. The market needs that, absolutely needs it. They issued a utility token for a platform that you could then use that utility token in order to gain access to bidding on those assets. Now, how did they screw this up? Well, one, they got caught in the downtrend of utility tokens, completely out of their control. But their CEO went on a couple rants, really alienated people right before he needed them to believe. They then went on to start sponsoring fucking NASCARs. There's no way in the world that they had enough money to be doing that because I know how expensive it is. That's something that you do because your ego tells you want to sit in the pits with your logo on the little back corner of a bumper. They also then allowed the platform to accept USD and USD at a discounted rate, completely diminishing the reason that you would buy Loki Coin. Now, we bought a ton of that. we were able to exit 50% of our holdings before it bottomed out, but we're now sitting on 55% of our holdings at like an 80% loss on that asset. Now, as an investor, we have a thing called cost basis. We always try to get back out our initial investment the second that we can. We're pretty close to even on that, but we're never going to make the types of profits that we thought because that project keeps falling further and further behind. It's a victim of really, really smart people with great technology, with absolute market demand, just screwing it up every single way that they could. And I'm sorry, I liked the guys, but how did you screw this up?
I think that it's really important to, all angel investors will tell you bet on the jockey, not the horse, right? Ariella said it the other day that one of her mentors said that, an A+ team can take a D+ idea and make it a B. And a D+ team or C+ team will take an A+ idea and make it bad. And so I think, leadership is real and lack of leadership is a killer. So that's a really good point. Now, all right, you hit some home runs. What is the biggest home run that you hit?
Dragon Chain by far. And it was pure luck, balanced with a little bit of skill. It came to us from a data set perspective like 6 hours before they were closing down their ICO. And we started to look at it and we're like, this can't be real. Like this, and this. And one of it was that it came out of the Disney incubator and its executive team was the team from Disney. And I'm a Disney stockholder, so I called up my broker and I'm like, who in the world can I talk to find out if this is legit? And a little bit of back and forth, a couple phone calls that went nowhere. Finally got a hold of somebody at Disney. It's like, yes, they are a graduate of one of our incubators. So we're like, screw it. Let's put 10 Ethereum on this. I don't know if that was $300, $3,000 at the time. Well, we bought it at 6 cents and we wrote it up to $5.35. And we exited the 90% of our holdings right then and there. So it is by far, it's one of our only 100x returns on that. And then we scaled down from there. But again, that one was kind of luck. Like we had 6 hours to make a decision. And that's the way that the ICO cycle went. We saw something that's like, okay, the right team, the right partnerships, i.e. we're bringing blockchain to the entertainment industry with Fox and Disney and all of those different companies behind us. And then a little bit of research. I wasn't going to just pull the trigger and put money in. I needed to call someone and verify that it was real. It's that due diligence process. It's the research that Ariella did, the 47 points that she went over before she put the project in front of me. It's a conversation that our team had. Do we even want to consider this? And then it's the phone calls that we made to say, is this stuff legit? Pull the trigger, hit a grand slam on that one.
Awesome. Now, what is a project that you hit a home run on that you're like, at this time, are scared to death of? And you don't have to say one if you don't have one, but I'm just curious. Is there anything that you're like, oh, I thought that was awesome. It did pan out good for me, but now I wouldn't touch it?
Oh, interesting. Yeah, honestly, the majority of them. And I think what it is the change in landscape now. It's like, it's gone back to fundamentals of investing. Like, what am I actually getting for my money? You used to be able to invest in ICOs from the potential of return based on the market. Now you have to look at, okay, the market demand for these types of tokens is not huge because of liquidity problems. So if 5 years from now, which is back into a normal time frame for an early stage investment, is this technology still going to exist? Because if it's not, I can't invest in it today. So when we look at the T0s of the world that we've invested in, which are regulated exchanges coming to market, I'm still in that. I would be in that today. In fact, it's open to accredited investors still as they finalize their last raise. But I look back, I'm trying to think on, man, I wish I had our slides up from some of our home runs that we had. Do you remember some like
Genesis Vision was a home run?
Yeah, Genesis Vision was a home run. You know what? They're still interesting. They've been clobbered lately, but they're bringing to market a platform that allows everyday investors to get access to investments that they might not be able to get into from other regards. They're based in Ireland, where there's a limited amount of regulation stopping them. Now, whether or not at some point in time they block U.S. investors, I still firmly believe in their technology, so I would still do that one.
Yeah, Wager was another, it was a 10x. So
Wager's interesting too. If you would have asked me a month ago, I'd been like, no. But then the United States government comes out and says, you know what? We're going to deregulate all gambling across the board. And now a coin like Wager might have potential, but I don't know what the infrastructure of the team is. We still hold those coins mostly because they're in a crappy wallet that makes it really hard to transfer them out. And I just don't want to screw with it for $1,200. But it's still giving a good ROI for us.
yeah, and one of the things I want to make a point of right now, and I'm not like into a big pitch fest or anything, but I think we have this group called the Insider Circle. It's a digital currency index insider circle. And why am I bringing that up right now? Because we talk about things like this. Because here's the thing, and what you just said right there is huge for people on the outside looking in. There are so many variables that go into this that change by the nanosecond. So, well, last week, I didn't think it was a good thing, or last month, but now I'm like bullish about it. And so if you're not, you don't have to follow us, you don't have to follow Roger, but you need to be following somebody, don't you think? Somebody that has a pulse on this market that can help you make decisions. And they're not always going to be right, but you're going to get a macro level of where you ought to be. And I'm not talking about guys that tell you go buy this coin and that coin. I'm talking about a macro understanding of the market. I think it's priceless.
I think so too, because the macro influence of different elements, mostly again, regulation, which I keep harping on, it's not something that we can control, and it has the most dramatic impact. This is not a strategic market right now. It's an emotional market. Decisions, the price momentum is based on the emotion that people have when they're consuming news, i.e., either on regulation or a recent study that came out that said Bitcoin price may have been manipulated by the scammers that founded Tether. And that can drive down the market, whether or not it's actually true. We don't have to get into a debate on whether it is true. But the influence that those things have mean that the markets aren't normal. They're not normalized markets like an equity market would be, where you have some substantiated data to flow underneath, like earnings per share, debt ratios, and things like that, free cash flow, profitability. We don't have that kind of stuff. So that macro stuff can change an entire industry in a minute. And that means what was good today is bad tomorrow. What was bad 2 weeks ago is a freaking amazing investment today.
Yeah. All right. So now, yeah, I think that's a good point. And so let's talk. You're a beginner, okay? And you're thinking about getting into this market. What's your advice to them?
Macro caps. I mean, straightforward macro caps until there's more availability of index opportunities. You're not going to go wrong if you believe, now this is an investment advice, if you believe that this market has legs and you're not an accredited investor that can get access to equity investments in the infrastructure, your only play today is macro caps. And when I talk about macro caps, they're the Bitcoins, they're the Ethereums, potentially they're the Litecoins and the Bitcoin cashes. I'm a little scared of XRP right now because I think they have a higher probability of being labeled a security than maybe Ethereum does because it's some of the dynamics of how their project was brought to life. But yeah, that's where you want to get started today. If and when index opportunities, ETFs, direct indexes, regulated indexes, not meaning these coins that are launched in Malta that say they're an index, but you have no idea where the rest of the money went. That would be even a better play, but the regulators are holding that back from the everyday investor right now.
All right, cool. What's an investing, real quick, because I've got another follow-up question. What's a book on investing, not necessarily crypto, that you recommend new investors read?
Not on crypto. You mean besides the New Wealth Secrets book?
Besides the New Wealth Secrets book. That's obvious.
I think Richard, one of our hosts, recommended this book to me. It's called Market Wizards.
Okay.
And man, I was blown away by that book. There's two reasons, and I know we're running out of time. The first one is it talked a lot about the original traders of Forex. And people like to compare the crypto markets to the dot-com boom, the internet cycles. The idiots that are out there like to compare them to tulips, not realizing that the tulip never actually happened. But this market most closely mimics Forex markets in that when they were new, the biggest problem was liquidity. demand for liquidity and the ability to move large amounts of these currency assets across borders. It's like we're mimicking everything that was there. And what it is it's all real world stories or interviews of some of the biggest traders on Wall Street talking about their successes and failures. You learn more from stories than you do somebody that's going to talk to you. Here's the 3 secrets of doing this. It's the stories, like the conversation that we're having about our biggest successes and failures. It's what you learn from those that's important. I recommend anyone that's an investor or wants to be an investor, whether you're a trader or a long-term buy and hold, you need to read Market Wizards.
Awesome. Okay. Now, besides getting involved in the insider circle that I always call 8 different things, but it is called the insider circle. So besides getting involved in that, which I highly recommend, what is something that an advanced investor can do right now? They're in this market. What should they be doing?
There's 2 paths. If you're accredited, you need to be looking at the equity investments that are available to you out there. The Circle round is closed. The Ripple round's closed. The T0 round is still open. You need to be looking at Equity Zen. You need to be looking at some of these other equity markets to find access to some of these blockchain infrastructure style investments, or in my mind, artificial intelligence and med tech as well. If you're not, you've really got to look at some type of cash flow, either through trading or some types of masternodes or mining. Not cloud mining, where you give somebody else your money and you hope and dream that they're going to give it back, but the type where you can get paid dividends by buying assets and holding in wallets that you completely own and control. And if you're smart enough and if you're disciplined enough to be successful in trading, I would take a look at that, because volatile markets are the best to trade when you can create downside protection, which there's limited availability for that in this market. But you've got to be in one of those 2 camps. And I'm going to say that advanced trader or advanced investors are either advanced or accredited. Accredited, there's tons of opportunity. And I hate being the person sitting here telling a lot of people that they're getting screwed by regulators by not having access to most of those, but they are. It's an unfair world. Millionaires become multimillionaires because that's the way the system's set up.
Yeah. So just remind everybody, because there seems to be maybe some, what's the word I'm looking for? There's not clarity on what is an accredited investor in the United States. Can you tell everybody what that is?
Yeah, there's a couple different ways that you can be accredited. The first one has $1 million in net assets, not including your primary residence. So that means liquid assets or non-illiquid, like a lot of private placement stuff is probably not going to qualify. So like your brokerage accounts, your bank accounts, investment, real estate can be considered in that. Now, I'm not a tax professional. That's not tax advice. The other side of that is that you've made $200,000 a year in documented taxable salary for at least 3 years in a row. Now, those are the first 2 things. Now, one of the hard parts is that every 90 days you have to redo your accreditation, with the CPA getting a new letter that the letters are only good for 90 days because the market shifts so fast. You're accredited one day, you're not. So they make it just about as hard as they possibly could in order to keep the rest of the people out of the markets.
Yeah, I think that we talked about this, and we'll kind of end with it. It's a good and a bad thing, right? For people that are doing their research and they're really diving into the markets that aren't accredited, kind of sucks for them. But for, my grandma and some other people out there, those rules are put in there to protect folks.
They are. And I think our co-host Adrian came up with a brilliant idea in the Tim Draper interview, is that for those that are not accredited in the normal classification of wealth, that there should be at least some type of course, whether it's virtual or in person, for a week where you can get certified to give you access to those types of investments. Because the rich get richer is not a myth. It's the reality of the system. And for those of us that are like, I'm about to turn 40, I've spent 25 years building my wealth to have the opportunities to make those investments. I would love to see more of my millennial friends have that opportunity without having to sacrifice 120-hour work weeks for 10, 12, 15 years in order to reach that status. There's also another one of our friends that was on this, and because he's an attorney, I'm not going to state his name, that made a brilliant statement that this accreditation process isn't really about protecting the individuals from the opportunities. It's about protecting the companies that bring the opportunities to market from getting sued by those uneducated investors that think that everything always goes up and they're never willing to lose money. So there's that other tribe or other camp that people are in that are like, it's not about protecting them. We're actually trying to protect ourselves from frivolous lawsuits. And you know what? They're not wrong from that perspective.
Great point. Awesome. Man, I enjoyed it. Anything that we missed? You got about 30 seconds. Anything that we missed that you didn't want to talk or that you wanted to say?
I still believe that this is the greatest wealth creation opportunity in the last 100 years. Now, it's not a transfer of wealth. You're not taking money from one person and giving it to another. There are opportunities for individuals to build wealth through investing, both in direct equity assets as well as limited supply products like a Bitcoin, either as a store wealth or as a potential future worldwide currency. This isn't a go all in type thing. No investing is. This is part of a diversified portfolio like any other investment is. It's hyper speculative. It's got hyper aggressive returns if done right. If you're watching this video, jump in, not head first, dibble your toes in the water, make sure the water's the right temperature, and then slowly make your way in. But you've got to be in on this market somehow, some way, because you don't want to be sitting there 20 years later thinking about the fact that you should have bought Amazon at $17 or you should have bought Facebook at $16, which in full disclosure we did. You want to be holding some of these assets. You want to be thinking about how your 4-month-old can have a Roth IRA that holds blockchain investments in them. Do that for your legacy, for your wealth. If it's $500, awesome. If it's $500,000, awesome, but get in.
All right, man. Thanks, Roger. Good time. And man, it was fun. So I had a good time. We could talk for hours. So
I know. I love it. I love it.
Everybody, thank you for watching this segment. And as we leave here, just like to remind you that you can own this entire training summit, including Roger's talk, through our cryptocurrency training kit. It's going to get you downloadable access to the videos, audios, transcripts, and bonus gifts of all of our speakers. I think over 50 people have participated in this, all for only $297. You're also going to get a special bonus training called the Crypto Mastery Program that Roger and I are producing right now. And after the summit, the price of this training program is going to go to $497, which quite frankly, still a great value. But if you'd like to get it on the cheap, you can do that right now. So everybody, on behalf of the Future Money Summit, we appreciate it, and we'll talk to you soon.